second day in Stuttgart at the Invest, and I'm very happy to welcome John Reeves from Westhock Development Corp. Welcome, John.
Thank you very much. It's a pleasure to be here.
Thank you. John, tell us something about Westhock.
Westhock is a energy company, and our focus is primarily on gas. What's unique about Westhock is the way we obtain our feedstocks for gas. One of the ways that we develop gas is through gasification of coal, which we in turn convert to a gaseous state and produce methane gas. Another division or wholly owned entity of our company is Westhock Energy, and we're in the process of drilling wells in the Piceance Basin in Colorado, likewise to produce gas. One of the most recent exciting developments in Westhock is we've entered into a JV arrangement to develop a property located in eastern Colorado, a fairly large property, and we hope to bring it on in the near future also as a feedstock to produce gas.
Who's your partner there?
Our partner, as per our news release, which you can see on our website, is Radar Acquisition Corporation, which again is another Toronto Stock Exchange company.
At what stage is your project at the moment? Are you producing already or still exploring?
In the Piceance Basin, where we're drilling oil and gas wells, we expect gas production out of our first well within the immediate near future. We have actually have started the completion process and are wrapping that up on that well.
And you are producing yourself, you're not selling it off to anyone?
We will produce the gas,
okay.
And then subsequently in an arrangement that we have with Encana Oil and Gas, they will gather and will sell the product for us.
What production do you expect from this well? I mean, what figures are we talking about?
Well, again, in the oil and gas business, you never know until it actually comes into production, but we're very optimistic about it. One of the numbers that was quoted in the National Instrument 51101 report by our independent consultant said that we'd have an initial production rate of about 1.7 million, maybe as high as 2.1 million cubic feet a day. From the initial shows that we had in this well, I think we will exceed those quantities.
Even exceed, so not only live up to them, but
possibly exceed them, yes.
Okay. What about your financial situation? Do you have the money to do that?
Yes, we do. Recently, we just completed a non-brokered private placement where we brought approximately $3 million in the company. Plus, we've entered into a agreement with the Luan Energy Company from the Shanxi province in China, and that will provide us with another $7.5 million. With that capital funding, we expect to be able to drill enough wells in the Piceance Basin such that that project actually becomes self-sustaining from cash flow generated internally. Now, of course, I have to add the caveat that that's dependent on market prices of natural gas, which, as you know, is a very volatile market.
Do you plan on exploring any other projects, or are you just busy enough to producing the ones?
Presently, our what we call our flagship projects is the project that I just told you about in Colorado East. We're going to be pulling coal samples off of that project in the near future. That will be a very low-cost strip mine, and we're going to send those down to Sassalurgi for coal gasification testing. We're very, very confident those will pass the test. Likewise, we're proceeding forward with our Northwest Territories property, and we hope to have the bankable feasibility study commencing essentially within the near term also.
Okay. Near term means weeks or months?
Near term, we hope to commence the study probably within 1 to 2 months.
Okay. Who is on your management team?
Well, our management team is a very well-versed and has a lot of depth. Our president and co-chairman of the company is a fellow named Dr. William Hart. He has a PhD from the Colorado School of Mines, has worked in the energy industry all his life. He's probably the foremost expert in coal gasification. We have a CFO who's a CPA, a fellow named Roger Bear, myself. Likewise, I'm also a graduate from the School of Mines, have a PhD in mineral economics, other degrees in geophysics, physics, worked in the energy industry all my life.
I guess the competition is not in coal gasification is not as big as in, let's say, gold explorers or oil explorers, so you are quite unique in your field of work.
Well, there's a lot of competition in all energy businesses, and one of the interesting things that's starting to occur in the marketplace is there's an actual cost convergence that's occurring between the oil and gas industry and the coal gasification industry. With the recent advances in coal gasification and the subsequent conversion of syngas to methane, for example, the large Beulah plant located in North Dakota has a cost of approximately $4 per MCF to make natural gas. It turns out that coincidentally that's the cost to produce natural gas out of oil and gas wells in the Piceance Basin. So I think one of the things we're going to see is that as oil production continues to deplete and natural gas production continues to deplete from traditional oil and gas reserves, coal production will be increasing and subsequently will become the feedstock to generate natural gas and to generate liquids primarily through the Fischer-Tropsch process, producing kerosene and other diesel and other liquid petroleum products.
So this is a business with a big future.
It's a very big future because with the growth that's occurring throughout the world, primarily in India and China, that has driven the price of oil to a point where the alternative fuels from coal have reached the stage of being economically viable. It's interesting to note that there are many what I call unconventional sources of oil that are starting to come into play, starting from the development of tar sands in Canada. In Canada, we have more oil reserves in tar sands than Saudi Arabia does. Not to mention the fact there are tremendous untapped tar sand and tar reserves in the United States, which are not being produced.
As technology advances, the cost effectiveness is
we're right at the precipice.
Okay.
Their massive production facilities are now producing oil from Canadian tar sands, and likewise we're going to see an extensive development of the production of methane gas and liquids, and by that I mean petroleum-based liquids, diesel, kerosene, etc. from coal. Let me assure you that with these alternatives feedstocks coming on for the production of oil products, we're not going to run out of oil. The industry is just going to simply change. And this is a very exciting place to be at this point in time.
Last but not least, what's the current price of your stock?
Current price of the stock is around about 60 cents a share. We think with the production coming online with the Piceance Basin and coupled with the Colorado East project, which is a very mature project, we think the stock is tremendously undervalued. Given our coal reserves that are in our Northwest Territories properties and our groundhog properties, we really believe that the company is at a turning point, and we're very excited about what the future holds for us.
Well, then I wish you all the best for the future, and also good luck again here in Stuttgart, just raising the interest in your company. Thank you very much for giving us this insight into West Hawk, and once again, all the best for the future.
Thank you very much. It was my pleasure.